Hey everyone, we are back again for another edition of That's Our Two Satoshis Live. For those who have never been watching the show before, it's weekly. We do it every week. We talk about the crypto markets, and usually I bring on a guest. So today, I'm honored to have a new guest, someone I've never had on here before, Ryan Rasmussen, who is a senior crypto analyst at Bitwise. You guys are probably all familiar with Bitwise, who's running away with asset management here in crypto. Ryan, thanks for joining.
Hey, yeah, great to be here. Hopefully they are familiar with Bitwise, but I appreciate you having me on.
Okay, well, we'll get into more of Bitwise in a second. And those for those who are jealous, both Ryan and I are living in Los Angeles, and you can see the sun shining finally behind us. Before we get started, as always, quick disclaimer: this is not investment advice. Please consult your own research for any investment advice. That being said, we are going to talk about the markets. We always do. We write a blog every week talking about the markets. This week, we wrote about it on our blog. ar.ca/blog, all about Bitcoin and the halving, which happened over the weekend. Bitwise also wrote about the halving, coincidentally, which is why Ryan's here today. Obviously, other things going on in the market as well, but really Bitcoin kind of stealing the show last week with regard to the halving. And for those, just a quick explanation, maybe for those who are not as familiar. But recall that Bitcoin's block subsidy, which is just the number of newly issued Bitcoins paid to the miner of each block, decreased from 6.25 Bitcoin to 3.125 Bitcoin over the weekend, which means that daily issuance of Bitcoins is now down from 900 Bitcoin a day to about 450 Bitcoin per day. That means the annualized inflation rate drops as well. Basically, it's a pre-programmed event. It happens every 4 years or so. This was the fourth one in history, so we only have an n=3 narrative to go on in terms of what this means. There'll be 30 more over the next 100 plus years. But typically, this has been seen as a pretty big catalyst for the market. And I've always been kind of wishy-washy on that, Ryan. It's like, yeah, it's a catalyst because it's worked the last 3 times, but at the same time, we already know exactly how many Bitcoins are going to be issued. So what difference does it make if the daily issuance slows down, if we already know what the total number is anyway? What's your take on whether or not this is really a catalyst or if it's more just coincidental?
Yeah, I mean it's a good way to think about it. I think there's perhaps three reasons why this could be seen as a catalyst. I mean, number one, this is a great marketing event for Bitcoin. Every 4 years, there's this big focus by the entire industry on the monetary schedule or issuance schedule for Bitcoin, which I think is really important and helps bring the industry back to its roots of why Bitcoin matters. And particularly right now in 2024, I think that's more important than ever. So I think it's a great marketing tool. The lower issuance definitely plays a factor in the from a lower sell pressure going forward, but less and less of a factor each having. So I think knowing that that's coming is great, but perhaps not as strong of a catalyst as it's been in prior cycles. And then right now with the Bitcoin ETFs being live, you have like much more demand coming into the market. And so the fact that we're focusing on this event while you have this supply and demand shock, I think is important and can prove as a catalyst to Bitcoin.
Yeah, and I think that's important, right? Because again, we already know the total number of Bitcoin. So anybody who subscribes to efficient market hypothesis and understanding that anything that's already known is already priced into the market, something like the halving kind of drives you crazy. But at the same time, when you just think on a day-over-day basis, the fact that there is half as much new Bitcoin coming to market at the same time, we finally have this real source of daily demand coming in through these ETFs. It does make a difference. And in fact, part of what I was trying to think about when thinking about the halving is this really going to be different than the other ones? And again, there's only been 3 other ones, and you could even almost maybe get rid of 2012 because the market was too small to even matter. So really, there's only 2 other examples, 2016 and 2020, that's relevant here. So I started thinking about like, well, what is different this year? Well, one, as you mentioned, we have from BlackRock to Fidelity to yourselves at Bitwise. With the new ETFs, really providing a really bullish tailwind and daily inflows, not to mention eventually kind of a big marketing spigot, which I know you guys have done a little bit of. I don't think BlackRock and Fidelity really have turned on the full force of their weight yet, but definitely have the daily inflows as well as the marketing engine behind you. Two is perhaps something I'd like your opinion on as well, which is the miners were aggressive and consistent sellers of Bitcoin heading into the halving this year, which was very different than the prior 2 halvings. Historically, the miners will mine their Bitcoin, hoard it, hold on to it because they know that they're about to get less, and then wait till price goes higher and then sell it. But because of the timing of the ETF launch in January, for the last 3-4 months, we have seen nothing but sellers selling from the miners into this price strength. ahead of the halving, which is definitely different, but also might mean that it is a breakaway from previous behavior. So we won't see as much sell pressure for them after. And then finally, the halving over the weekend, coincided perfectly with an event called Jubilee, which is basically upgrading the Bitcoin Core protocol. Basically, this is runes, right? So for those who have heard of runes, ultimately, this is something totally new, has never existed in the market, and the effects of runes trading has really made a difference with regard to fee generation for the miners. So a lot of different things. Of those three, any of those stand out as something that maybe will sort of change the way we either have historically or in the future will view the halving?
Yeah, I mean, this was a really unique halving for all those reasons that you spoke about. The fact that miners were selling going into the halving, could to me be a function of fear of the unknown. What is going to happen in this scenario where we've had this big run up in price ahead of the halving and a bit of a drawdown right before the halving? I think we sold off the bit 10% maybe or so the week before the halving. So just capitalizing on gains and making sure they have enough runway to weather whatever future storm may or may not come could have been part of it. Certainly with the launch of runes, which has driven this huge spike in fees that's more than offset the cut in block rewards, has definitely been important, and I don't think would have been foreseen by the miners. Not something they definitely could have gambled or risked a portion of their business on. So definitely great to see that when we're in this new world of lower block rewards, that we've seen more than that be offset by increasing transaction fees, which of course is the long-term security budget for Bitcoin. So exciting to see. I'm a bit amazed at how much people were spending to mint these runes, but you give people the surface area to do crazy things on chain time and time again. We've seen them do those crazy things on chain, and doing that on Bitcoin, I think for a lot of people is even more exciting. So great to see this dynamic shake out, but this is definitely a different halving than any halving we've seen before. And as you mentioned, there's only been a few, but this is certainly unique for a number of reasons.
Yeah, for sure. And I think most people probably care about is, well, what does this mean, right? What does that mean going forward? What does that mean for price? What does that mean for the Bitcoin network? I think shout out to Via Bitcoin or Via BTC, who actually was the ones who solved the block on the actual halving block. I think that was 840,000 was the block there. So shout out to them for actually being the ones to mine that one. One of the things that I thought was interesting was that they made 3.125 Bitcoin for solving that block, right? That's the subsidy reward, but they made another 37.626 Bitcoin in transaction fees, 12x the subsidy, and that's wholly attributed to runes, like we talked about. So that's obviously very new and different. And shout out to Galaxy Digital. I read something over the weekend from them. They said over the 15 years that Bitcoin has operated, fees have never comprised more than 12% of miner revenue. And that was during 2017, which was actually an outlier. Most of the time, it's really been 3 to 6%. So the immediate takeaway here is just that this is a huge boon to the mining industry. The fact that you can generate such a massive amount of fees in addition to just the subsidy. And obviously, that is, a huge boon for the mining stocks themselves, which is why we've probably seen the last few days the mining stocks going up so much, even though they traded down quite a bit into the halving, right? So the generic thought on the miners is, well, if your revenues are about to get cut in half, therefore the stock should go down. Actually, there's a lot of reasons why the stock should go up. One, because of these additional fees, and two, because it's going to price out a lot of the smaller mom and pop competitors and be good for the larger conglomerates that have been selling stock and doing other growth initiatives to build up their technology fleet and lower their ultimate costs. So anyway, with that being said, good for the miners, certainly. What are your thoughts here for Bitcoin itself? Does post-halving world, whether for the next 4 years, mean something big to you? And I will reference the piece that you guys put out on your blog earlier today at the experts.bitwiseinvestments.com, saying that here's the price of Bitcoin from halving to halving, right? So 2012, it was $13. 2016 was $639. 2020 was $8,475. And 2024, $68,982. So what are we looking at for 2028, or at least from that path from today to 2028?
Yeah, I mean, I think we have that trend that we've seen, going back from history. Bitcoin continues to reach a new level of price discovery in the 2, 3, 4 years following the halving. Some historical data would tell us that the year going into the halving and the year following the halving have been the best boom years for Bitcoin, and before it settles down and generally has a retrace year, the third of the 4 years of each cycle, where things kind of reset. We saw that in 2022, then we saw 2023, and the beginning of 2024 have really strong performance. The next year and a half could also be great for Bitcoin. We're also, as we've been talking about, in this kind of new era of Bitcoin going mainstream. These ETFs are really this IPO moment for Bitcoin, and now we have unleashed or unlocked the gates for institutional demand and retail investors alike who are investing in Bitcoin through traditional brokerage accounts or IRA accounts, retirement accounts. And so I think that we could see more price discovery than we've seen in the past in the 12, 18 months following the Bitcoin halving. I also think it's really important to think about the miners. You made some great points that they're here to mine Bitcoin, and that's their core business. And even though the block reward is falling, they've been focusing on initiatives, especially since the last bull market, to increase the efficiency of their technology, lower their cost basis, and just ultimately grow the net number of Bitcoin, or the production that they're Bitcoin they're producing in their businesses. So I think we'll see some consolidation there in the mining industry, the more profitable miners consuming the less profitable, less efficient miners. But I think Bitcoin has a really bright future ahead because of this, the foundation that we've laid in this past 2 years, and the institutional adoption that we're continuing to see. We go out all the time and speak to financial advisors and RAs and try to get them educated on Bitcoin and thinking about investing in Bitcoin on behalf of clients and in model portfolios. And those conversations were really promising heading into the Bitcoin ETF launches and have been really great over the past 3 months. But I think we have many more unlocks ahead of us on some bigger platforms and larger RAs and larger wirehouses. And so I'm really excited about where we could go. And I think certainly, my guess is that the price will be in a better spot come 2028 at the next halving. And I'm really excited about that.
Yeah, for sure. And I think I'd be doing the viewers a disservice if I didn't take advantage of the fact that you're here today. I know you're on the research side and not necessarily always client facing, but give us one anecdote, something from the experience of the last 3 months with the Bitcoin ETF that would just blow people's mind. And I'm not talking about giving up people's names or anything like that, but whether that is, a type of a customer that you would be just floored to know that was talking to Bitwise about Bitcoin, or some, a big broker dealer or somebody interested in the ETFs, or just something related to the launch of the ETFs and the success that Bitwise has had that would just blow people's mind. Again, even if you're just using generics and not giving up any names. Is there any big stories or things that come to mind that you just could not believe happened?
Yeah, a couple things come to mind. The first thing that comes to mind is that there are really large RAs out there that are seriously considering allocating to Bitcoin. They can actually move a little faster than some of these, broker dealers or networks of independent broker dealers that, go have large due diligence and compliance teams that have to go through the review process and due diligence process for approving what these advisors who are associated with these platforms can trade. And so RAs are moving very fast. And some of the large ones like Carson Group, which manages tens of billions in assets, is approved multiple Bitcoin ETFs. They're one of the larger RAs across the country. So, they were quick to approve Bitcoin ETFs, and that unlocks a ton of potential investors into Bitcoin. And then, a more detailed anecdote that I found really interesting is, I'm traveling with our sales team a handful of times to go into offices and do office presentations. So we're presenting what is Bitcoin, how do you get allocation to Bitcoin, how does it impact a portfolio in these boardrooms, during lunches. And the level of questions that we're getting is far superior to the questions we've gotten in the past. We've seen a lot less or received a lot less questions of, isn't crypto just a Ponzi scheme? Why is it not a scam? To, questions about the economic policy of Bitcoin. How does mining work? What is the halving? How does it actually impact a portfolio? What are the correlations to traditional equities? Questions that you would only ask if you were seriously consider making an investment in an asset. So I think the level of questions has definitely been a big step up from where it was prior to the launch of the Bitcoin ETFs. And the allocation size is really different. We've gone to maybe considering a 1% allocation to seriously considering or actually implementing a 3 to 5% allocation. So a really big finding here is that, 3 to 5% is the new 1%. And that has a huge impact when you think about how much money a lot of these wealth managers actually control in the broader economy.
Yeah, and I've spent a fair amount of time in boardrooms as well. Sometimes, 15, 20 people across an enormous table, and not just on the RIA, FA side, but with the, endowments and multifamily offices and insurance companies and pensions. It's always funny, right? Because, usually in that room, you can tell right away the one or two people who already get it and they're there trying to advocate on behalf of crypto for the rest of them. And then you can always find the one or two who are like, they are coming in so hot and so skeptical,
Yeah.
and inevitably, you always see that kind of light bulb go off at some point with those skeptics in the room, and it's really enjoyable when you see that. And not, we're mostly talking about Bitcoin here because this is a Bitcoin story this week. I think most people know, me personally, I don't always focus on Bitcoin. In fact, I rarely do. I focus on the rest of the market in different sectors, and different narratives. But certainly, it's as you said, the investor base is getting smarter. They're asking smarter questions. They are certainly turning off that preconceived skepticism pretty quickly once you get through these discussions and conversations. And to your point earlier, whether the Bitcoin halving itself really makes that big of a difference in the 4-year cycle, or if it's just coincidence, it certainly ramps up the marketing, the understanding, the discussions, and awareness. So certainly good for Bitcoin, certainly good for the ETFs and Bitwise specifically. And hopefully good for all the investors out there who are looking at both Bitcoin and other areas of the digital asset market. So with that, I think we're wrapping up on time here, Ryan. I do appreciate you joining. Any other final words for the audience and or places where they can reach you or Bitwise and learn more?
No, thanks for having me here. I love what Arca's doing. I can be found on Twitter. My handle is Rasterly Rock. It's a poorly made Game of Thrones reference there, but all the educational content that we put out at Bitwise is free. You can find it on our website. We have white papers, we have 2-pagers, we have kind of webinars that we host all the time. So if you're interested in learning more about crypto, Arca is a great resource. I think Bitwise also puts out a lot of educational materials. But appreciate you having me, and this was a fun conversation.
Great. Well, Ryan, thanks again for joining. And everyone, again, you can find our blog on our website, ar.ca/blog. That's our 2 Satoshis is a weekly blog. It's a weekly Twitter stream or X stream. And Ryan, thanks for having us. Again, you can find all of Ryan's stuff on the Bitwise website or find him on Twitter. But thanks again. Congrats again to Via BTC for mining that block. And we'll see what this post-halving world looks like. So we'll see everybody next week. Thanks, everyone.